Americans have lost billions of dollars in a string of fraudulent investments. Many are linked to China-based companies that have now been taken off of U.S. stock markets. And according to a report by ABC News, Chinese regulators have not actively helped to stop this. In some cases, the Chinese firms were operating with the mindset of taking the money and run, then to disappear with investors' money. In most countries, that mentality does not turn into realty because procedural regulations and government oversight are in place to prevent it. These rules do exist in China too, but they're not always enforced. The United States Securities and Exchange Commission, or SEC, have investigated a number of Chinese firms suspected of fraud. But when they make high-level requests to their counterparts in China, cooperation isn't always forthcoming. The overall losses associated with recent Chinese companies defrauding U.S. investors are estimated at tens of billions of dollars. That's well over the sums lost in the Bernie Madoff Ponzi scheme. Fraudulent practices include companies over-exaggerating their financial numbers. U.S. investment authorities and stock markets say they will be much more vigilant in the future to prevent these types of fraud. Shapiro said the SEC will do what it can to recover what has been lost by U.S. investors, but conceded it's difficult without the cooperation of the foreign government.